Hey there, welcome back. Today we're breaking down one of the biggest tax overhauls in recent history, President Trump's new, big beautiful bill. Whether you're working, retired, raising kids, or just trying to survive tax season, this one's going to hit home. Signed into law on July 4th, this bill is already changing the game for millions of Americans. Some folks are saving thousands, others might not even notice the changes until they file. And yeah, a few of these updates are turning heads. Let's start with a big one. Trump made those 2017 tax cuts permanent. That means the same 7 tax brackets from 10% to 37% are here to stay, adjusting with inflation every year so you won't get bumped into a higher bracket just because you got a raise. Standard deductions. Still high. In 2025, it's $15,750 if you're single, $23,625 for heads of household, and $31,500 for joint filers. All indexed to inflation. But personal and dependent exemptions gone for good. If you're in a high-tax state like California or New York, listen up. The SALT deduction just quadrupled. You can now deduct up to $40,000 in state and local taxes if you make under $500,000. But it starts phasing out in 2029 unless Congress steps in again. Now for seniors, there's a new $6,000 deduction for people 65 and up. It's stacked on top of the existing senior deduction and helps reduce your taxable income, unless you make over $75,000 solo or $150,000 as a couple. Then it starts to fade out. And yeah, it disappears after 2028. If you're working in hospitality, restaurants, or anywhere that tips matter, here's a first: you can now deduct tip income. Up to $25,000 if you make under $150,000, or double that for joint filers. Report it properly, and it's yours. And there's more. You can also deduct up to $12,500 in overtime pay, or $25,000 if you're married. These are major wins for workers clocking long hours or hustling multiple jobs. And the best part? You don't need to itemize to claim them. Bought a new car, or planning to? There's a car loan interest deduction now. Up to $10,000 in interest on US-made vehicles, if you're under the income cap. But these perks, tips, overtime, car interest, they only last through 2028. Now to families. The child tax credit bumps up slightly, from $2,000 to $2,200 per child under 17, with inflation adjustments each year. But here's the catch: you need a valid Social Security number to qualify. That rule cuts out about 2.7 million kids in undocumented households. Introducing Trump accounts for children. If your baby's born between 2025 and 2028, the government kicks in $1,000 automatically. You can contribute up to $5,000 a year in post-tax dollars. The money grows tax-deferred, and can be used at age 18 for school, a house, or a business. Adoption credits are now partially refundable, up to $5,000, and tied to inflation starting in 2026. Employer-supported dependent care benefits. Those got a bump too. You can now get up to $7,500 tax-free to help with daycare costs. And if you claim the child and dependent care tax credit, that now covers 50% of qualifying expenses. That's a big lift for working families with young kids. Charitable giving got a twist. Even if you don't itemize, you can now deduct $1,000 in cash donations, or $2,000 if you're married. But high earners now face a lower cap on deductions, 35% instead of 37%. Small business owners get a small win, too. If you make more than $1,000 and actively work in your business, you qualify for at least a $400 QBI deduction. Not huge, but something. Gambling losses are now capped, only up to 90% of your winnings. Casualty losses from disasters. Only deductible if the damage occurred during a federally declared emergency. Education accounts got a small upgrade. 529 plans enable accounts now cover tutoring, therapy, and credentialing programs. You can even roll 529 funds into ABLE accounts if needed. But not everything's a giveaway. Moving expense deductions are mostly gone, except for military and intel workers. Bike commuter reimbursements gone. And reporting thresholds for 1099s are going up. You'll only get a 1099K if you make over $20,000 and have more than 200 transactions, starting 2026. The White House says this bill is about rewarding work and simplifying taxes. And in many ways, it does that, especially for working class families, seniors, and service workers. But there's a cost. The Congressional Budget Office estimates it'll add over $3 trillion to the deficit. And to help pay for it, funding's being cut from Medicaid, food assistance, and green energy programs. So, is this real relief, or just a reshuffling? That depends on who you are and how you file. Either way, this bill is reshaping how America does taxes, and it's just getting started. If this helped you understand what's changing, do me a favor, subscribe to the channel, hit like, and drop a comment below. Do you think these tax changes help real people, or miss the mark? I want to hear from you. Thanks for watching, and I'll catch you in the next one.